Good morning, everyone. It's Craig Studnicky from ISG World and RelatedISG presenting the Q2 Miami report of 2025 this morning, July 24th. You know, we've been producing this Miami report since 2009, 1 year after that financial mess of 2008. From 2009 to 2019, we produced it once a year. It's really all we needed to do. While conditions were changing always in South Florida, once a year just seemed to be good enough to report on the state of affairs, if you will. But then 2020 came, and things were changing rapidly. Every 3 months, conditions had changed. The report that I might publish at the end of Q1 and on any given year became antiquated by the end of Q2. And for that reason, we now produce it 4 times a year at the end of every business quarter. I can tell you that 2025 is certainly no exception. Let's start with the headlines. These are 2 headlines just from 1 month ago in the month of June, and they're not any different from the headlines that we saw in April or May in all of Q2. The Miami Herald, South Florida home prices drop as listings increase, matched by Bloomberg, again 1 month ago. South Florida now is emerging as the epicenter of housing weakness. Oh, lovely. Well, part of the issue with these headlines is you're reading them, and worse, your clients are reading this, and it causes what we would call hesitation. Why buy a house? Why buy a condominium anywhere in South Florida when this is going on? Because this suggests that real estate prices are going down, so I'll wait. The problem with these headlines is they're simply wrong. Our current president would refer to it as fake news. I'll simply tell you they got it wrong because the journalists that are writing these stories aren't doing any due diligence, aren't doing any research whatsoever. And instead, they just put all of the inventory together in one big group and draw the wrong conclusions for you, for your clients, and me. I'd like to start this Miami report with an interview from George Perez with CNBC a few months ago, when George reflects on his 50 years of experience here in South Florida, including a reference to a roller coaster ride.
Florida, since I've been in business for 50 years, has been a roller coaster, right?
Yeah.
What I always tell the investor, the buyer, is when the roller coaster goes down, the next up has ever been higher,
Yeah.
always has been
Always
higher
higher,
than
yeah.
the previous high in the roller coaster.
Yeah.
So George refers to the roller coaster. He referred to when the roller coaster ride takes off, valuations get reset at a higher level than the previous high from the previous cycle. Well, there's really no way that George Perez or any real estate expert can forecast when the roller coaster ride takes off. But what George is suggesting is that when the roller coaster ride does go up, expect valuations to increase. That's his 50 years of experience talking. You can't get this from a library book. 50 years. Maybe there is no such thing as replacing experience. Nevertheless, let's see where we are on the roller coaster ride. This first graphic shows real estate transactions of condominiums over $10 million, comparing it all of last year to the first 6 months of this year, both Q1 and Q2 combined. Condos over $10 million in Miami-Dade County, Fort Lauderdale, Broward County, and Palm Beach County. All 3 counties combined, which we call South Florida. Well, if you look at last year, kind of speaks for itself. For a total of 47 transactions in the whole 12-month period, matched with 70 transactions in the first 6 months of this year. And more than that, take a look at the roller coaster ride. The velocity has increased significantly, particularly if we may. Let's compare June to June. June of 2024, 2 condo resales above 10 million in the Tri-County area combined. This year, 16. Well, if we're expecting valuations to go up, that has to mean the condominium inventory that you're finding in MLS. Please remember, these are condominiums less than 30 years old, over 10 million. I'm only talking about condominiums that's less than 30 years old at this point in this Miami report presentation. I will get to the other inventory in a few minutes. So these are condos less than 30 years old. If valuations are going up, it has to mean that inventory is shrinking. Inventory is getting tighter. Let's take a look at that. Well, 2 years ago, again, these numbers sort of speak for themselves. 2 years ago, at the end of Q2, 363 condos in MLS above $10 million, Tri-County area, under 30 years of age. Then 281, now you have 94. Well, that strongly suggests, since it does look like the roller coaster ride is going up, and inventory is dropping, that George Perez might be right. Well, when we look at the average list price of a typical condo, 10 million and above, January 1 of this year, and we compare it to June 30 of this year, 6 months, it's up 15%. Mr. Perez is right. Let's look at condos between 3 and 10 million. Same criteria. Tri-county, less than 30 years old. Well, last year there were a total of 472 resales, all closings. In the first 6 months of this year, 569. A lot more. But more particularly when you're looking at the graph, it does indeed look like, once again, we're on the roller coaster going back up. Let's look at inventory. Well, it's significantly down. 2 years ago, you had 1,100 plus. A year ago, a little over 900. And now you're less than 600 condos for sale, Tri-County, less than 30 years old. Let's look at valuations. Well, inventory is going down, velocity is going up. The average list price from January 1 to June 30 in this category, 3 million to 10, is up 12%. Let's look at condos from 1 million to 3 million. Interesting pattern, isn't it? So you take a look at last year, same benign kind of sales velocity, month by month by month. Look at this year. It is roaring. You sold 409, closed 409 condominiums in the Tri-County area from January through June. I don't think you ever closed that many in a single month, but you did it just last month. As you can see, that month was higher than the previous month, and so on and so on. In the month of January, you closed 303. Now you're up to 409 with shrinking inventory. Well, let's look at that inventory. What was 4,400 2 years ago, 3,600 last year, is now 1,700. We're running out of this inventory between 1 and 3 million, less than 30 years old. Consequently, the valuations are up 10%, January 1 to June 30. So with inventory shrinking, and Mr. Perez's analogy that it's a roller coaster, and when it goes up, valuations get reset, he nailed it. Let's look at the condo inventory, then final category, 500,000 to 1 million. You're looking at a kind of a crazy year last year, lots of gyrations, but it definitely slowed down in the second half of the year. This year is a very different story, a consistent roller coaster ride straight up. Inventory in this category is significantly down. We had almost 3,700 for sale 2 years ago. You had 1,800 for sale a year ago, and now you're down to 511. This is not a whole lot of inventory for sale. Yeah, you can expect future valuations to continue to go this way in real time, like now. But this number speaks for itself. The valuations here, the average list price, January 1, June 30, is up 15%. This next graphic, in case you needed another indicator that the market in 2025 is indeed significantly better than 2024, I offer you this. 2 years ago, the average days on the market for all condos less than 30 years old in the Tri-County area was close to 9 months. A year ago, it dropped to about 8 months. This year, you're at 3 months. The average days on the market in the first half of this year is 93 days. So what you have is shrinking inventory, a roller coaster ride going up, and the days on the market is a very, very strong indicator that the world has moved on and people are buying condominiums because they're coming here and they want something kind of new, and they want to live in South Florida now. This is the reverse of the condominiums that are over 30 years of age. Here you see, we'll get to that again in a second. You can see from 2 years ago, the average days on the market are growing. You're up to nearly 14, 15 months now on the market because they're simply not moving. Let's go now to the inventory that's less than 30 years of age. Those headlines that I showed you in the beginning of this presentation, this is where those headlines have a point, but you need to bifurcate, separate the inventory, over 30 years of age and under 30 years of age. It was 4 years ago that we all suffered that tragedy in Surfside, Florida, when Champlain Towers collapsed. People lost their lives. The state of Florida reacted. In my opinion, they overreacted, but nevertheless, they created these new milestone laws, milestone quotas that basically says all condos have to be brought up to current code. Loosely stated, that kind of is what it means. And they drew a line in the sand, the state of Florida, 30 years and older, 30 years and younger. 30 years and older are now going through these structural audits, and they have to match these milestone quotas to bring these buildings up to code. Governor DeSantis of Florida recently extended the deadline for those structural reports from last December to this December 31st. But what he did not do was change the ultimate outcome. You still have to pay the bill. You still have to get the building up to code. And most of the condominiums in the whole state of Florida, they don't have any money in their reserve account to fix these buildings up. Consequently, next two words, special assessments are being issued to all individual condominium owners in these buildings, and it's virtually all. The range of the special assessments, I've heard them as low as $25,000 per unit. I've heard them as high as $400,000 per unit in buildings that are over 30 years of age, 30, 40, 50, 60 years of age. Not real attractive. Most people, whether they live in New York City through Los Angeles, looking to buy in Miami, or you live in Mexico City, south to Buenos Aires, and you're looking to buy in Miami, you're reading these headlines. And for sure, you're asking your realtor, don't take me to any of those buildings because I don't need the headache. I don't need to worry about this mystery of how deep the special assessments are going to be in an older building. How sure am I about that? Well, let's look at this next set of data. At the end of Q1, there were 23,000 condos in MLS. Today, there's 25,000 condos in MLS in the Tri-County area. Now, in my 30-plus year career here in South Florida, that number is usually around 22,000. That's just the mean. That's the average number of condos. And when that's in MLS in the Tri-County area, you have a fair contest between the buyer and the seller. It's not a buyer's market. It's not a seller's market. It's more equilibrated. Today, you have 25,000 condos. So those headlines that say inventory is growing, yeah, inventory is growing. It's higher than it was in Q1. It's higher than it was all throughout last year. Don't forget 23 and 20 and 22. It's significantly higher. However, look at this next slide. When you study the inventory, 88% of that 25,000 condos are over 30 years of age. 30, 40, 50 years of age. It's almost 22,000 of the 25,000. Just over 3,000 condos, less than 30 years old, in the Tri-County area, all price points, 3,100. And as I showed you earlier, that's basically a 3-month supply. What does that mean? By the end of Q3, that inventory will be mostly gone, replaced probably by another 3,000, 2,800 to 3,000 units with prices going this way, because the demand in South Florida is still as good as ever. To add insult to injury, Fannie Mae, Freddie Mac, back in April came out with a blacklist. Basically, they're telling all mortgage lenders, if you provide a mortgage on a condo in Florida that is over 30, 40 years old, we're not going to buy those mortgages, which basically renders those buildings very, very difficult, very challenging to finance with a 30-year mortgage. So the demand is down because most buyers don't want to deal with special assessments, neither do the mortgage lenders. And here is where the press has a point. When they say that valuations are down, they are. With this inventory that's 30, 40, 50 years old, where you have condominium associations with virtually no money in the reserve account to bring these buildings up to code, therefore special assessments. Therefore, you see a decline in valuation of almost 24% in the last 18 months since the beginning of 2023. So there, and only here, does the press have a point. I hope in the future the press does a little better job with research before they publish those headlines, because it does create some hesitancy with you, with your clients, from people all over the world that are interested in buying in Miami. As you saw, though, from the previous slides, particularly inventory that's less than 30 years old in the Tri-County area, people aren't waiting anymore, and they do understand that that's where the inventory is. It's safe from special assessments. They're all beautifully finished buildings with great modern amenities, and they're buying anyway, despite some of these headlines. Mortgage rates, many of you ask me where that's going. Well, I always rely on Fannie Mae, Mortgage Bankers Association, and Wells Fargo. I have found them in my experience to be the best predictors of where rates are going. They're the most reliable. And basically what they're predicting for the end of this year is anywhere from 6.3 to 6.5. They're all in agreement that the 7% plus 30-year mortgages is bye-bye for now. They are expecting significant declines in 2026, both with short-term rates and long-term rates, mortgages. Almost every economist is in agreement with that, including the folks on Wall Street. I have to throw this in because at the end of June, whether it was NASDAQ, the S&P 500, or the Dow Jones Industrial, they have all hit world record highs. It is as if We've turned a page. In my opinion, you have to separate 2025 in two halves. First half, second half. First half was still stuck with some hesitation. Tariffs, this threat of tariffs out and around the world by President Trump, wars around the world, high mortgage rates, the indecision or indecisiveness of where rates might even be going. So it caused some hesitation. But it's as though the world has turned the page and they have moved on. It shows in Wall Street and it shows in the condominium velocity that we're seeing here in South Florida. Again, condos that are less than 30 years old. New construction. Here we go, pre-construction inventory. Well, we revised our chart. At the end of Q1, I think there were 133 buildings in development since 2020 in this decade. Now that number's up to 137. When you look at this big map, let me explain it for you. The blue color, the 15,000 units in 45 buildings, those are what we refer to as built condos that are with short-term rentals or no rental restrictions or condo hotels. It's really the same stuff, no matter what they call it. There's 15,000 of those in development. The pinkish red color is 13,800 units in 92 buildings. Those are what I refer to as traditional condos. That's what we need so many of. The box to the left that we call the downtown core, that's Brickell Avenue, downtown Miami. That's Edgewater, Wynwood, and Midtown. The total of the short-term rentals and the traditional condos equals close to 29,000 condos. 2/3 of that inventory, nearly 20,000 of it, is in that box, is in the downtown core. The rest of it is all beautifully, nicely distributed, as you can see throughout the rest of the map, from Fisher Island all the way up to Pompano and Hillsborough. When we look, now let's spend the rest of our time with pre-construction inventory on the traditional condos, because that's what we need more of. This next slide is one of my favorites, and I've referred to this as my Esther Jimenez slide. She's a lady that works with ISG, my colleague at down in Shoma Bay in North Bay Village. And I know I show this in every Miami report, but it does give you perspective and should give you the same belief that I have, that the current existing inventory, MLS inventory, less than 30 years old, is going to continue to see the upward climb on the roller coaster this year because of this. People that are moving to Florida want to live in Florida now, not 4 or 5 years from now. Now is now. Let me get into this with you. In the first part of this decade, the 2000s, we built too many condos, nearly 59,000, and that's just in Dade and Broward County. In the last cycle, we built almost 20,000, and you've heard me say before, but I'll say it again. My colleague that does that works with me in writing every single Miami report, her name is Athena Rossano, and she and I have looked at this number so many times, and we both have agreed this is exactly the number you need to build every 10 years just to match population demand, population growth. It doesn't include second home sales. It doesn't include investor sales. We're talking about people that are moving here that need a roof over their head, that we need to build almost 20,000 every 10 years to accommodate the surge in the population growth that we're enjoying. Well, there's only 13,800 traditional condos in development since 2020. But of those 13,800, there's only 7,600 that are going vertical, that are getting built. So if it's 20,000 that we need every 10 years, we're way, way short of what we need to accommodate the future population growth. I will quote again the current mayor of Miami, Mayor Francis Suarez, who has often said he's concerned that we're going to become a victim of our own success. We need to build more housing to accommodate all these companies that are relocating to South Florida since 2020. We need to build more condos and houses, but certainly condos with rental restrictions. The kind of condo that gives you quiet and peaceful enjoyment. The kind of condo where you can raise your family. That's not in a daily rental, that's in a traditional condo. And we're way short of what we need. There are only 7,600, and we're not building 20, 30-story buildings anymore, as you know. We're building 50, 60, 70, 80-story buildings. The Waldorf Astoria in downtown Miami is 100 stories. These buildings don't get built in 2 or 3 years. Aston Martin taught us that. Aston Martin in downtown Miami took a little over 6 years to build a 70-story building. So my point is, these 7,600 units with an average height of almost 60 stories, they're not going to get delivered for the most part till 2028, 2029, even 2030. This is the middle of 2025. What do we do between now and then? because this isn't enough inventory anyway. What do we do between now and then if the population continues to grow? I think we can expect the roller coaster ride to continue. This is also good. All of this information gives rise to condo conversions. Inventory is tight, new inventory particularly. And as far as way you can get from that 30-year line in the sand, the better your buyers are going to feel. This real deal story that appeared a year ago tells a very sobering story for multifamily developers. There are close to 60,000 multifamily, which is an industry word for rental units, in development since 20 in the Tri-County area, Dade, Broward, and Palm Beach County. Of that, 24,000 were delivered towards the end of the last year. There's another 35,000 that are forecasted to be delivered now within the next 12 months. That's a lot of supply. When the first 24,000 got delivered, this happened. There was an 8% decline in the average amount of rents the multifamily developers were collecting for one simple reason. Well, the laws of supply and demand are always at work. It's a little too much supply, even with the strong population growth that South Florida is enjoying. That's an awful lot of inventory to put on the market at one time, so rents are dropping. So those pro formas by the multifamily developers don't look quite as robust as they did once upon a time. There's another 34,000 that are going to be delivered in the next 12 months. Well, these buildings are usually very well designed. They look and walk just like beautiful condominiums with modern amenities, higher ceilings inside the units, nicely appointed kitchens and baths, and most of them are in excellent locations. So I am forecasting for all of you, you're going to be hearing a lot more about condo conversions in the next 18 months, maybe beyond. Demand, we've talked about this so many times. Last year was a record-breaking year. 2024, the state of Florida grew by a net of nearly 1,300 people per day, which made Florida for the third or fourth year in a row the second fastest growing state behind Texas. I think in 2021 we were the fastest growing state, and Texas was number 2. When you examine population growth rates of all 50 states in the U.S., it's all about Florida and Texas and Florida. Those are the 2 states that are booming. No state income tax, favorable weather conditions, particularly here in Florida. We have every reason to believe that this year, that this population rate is continuing. I'm going to end this Q2 presentation of the Miami Report kind of the way I began. I began with George Perez's interview on CNBC. CNBC and U.S. News and World Report combined with a story that came out just a couple of weeks ago. It talked about Florida is ranked for the 3rd year in a row as the #1 economy in all of the U.S., out of all 50 states, grounded in our strong economic growth, in part due to the population gains and all of these 200 plus Fortune 400, Fortune 500 companies that are moving just to South Florida. Doesn't include the rest of Florida. Doesn't include Naples and Tampa and Sarasota and Orlando and Jacksonville and Gainesville and Tallahassee, etc. Our favorable tax policies, there is no state income tax in the state of Florida. In my lifetime, I doubt you're ever going to see a state income tax in the state of Florida. And the robust education system. You know, those of you that have high school students know how hard it is to get into the University of Florida, Florida State University, University of Miami. The point is the education system here in the entire state of Florida is under major upgrade. And if anything, we're a little short on charter schools, whether they're elementary schools and high schools that we really, really need in order to accommodate, again, the sustained and continued population growth of the state of Florida. I'd like to end maybe on a personal note. It was around 33 years ago that I was living in New Jersey and I was offered an opportunity to move to Miami to sell real estate. And you know, change is hard. Change is really hard, no matter what proposition is in front of you. To make a significant change in your life is just kind of a human thing. It's really kind of tough to climb over that bridge. But a dear friend of mine whispered in my ear 33 years ago that the future of real estate belongs to Florida. I guess he was right. I'll see you all in October when we present the Q3 results. And I think you can expect Q3 to be the continuation of a beautiful recovery from what was a slow year in 2024. Enjoy the roller coaster. I'll see you in October. Bye-bye.